African producing economies, not just Nigeria, you must be strategic, right? So you do not sacrifice what we call long-term value for short-term liquidity, because that's really the apple that is being dangled on the face of African economies.
You're welcome to the Economy and Politics Conversation. It's a brand new week. I'm Ottoabasi Abasiekong. This edition will discuss repositioning Nigeria's oil and gas industry for global competitiveness. My guest joining me virtually for the discourse is Mr. Chukwuemeka Osuji, partner oil and gas, Olaniwun Ajayi legal firm. Happy New Year to you, Mr. Chukwuemeka, and great to have this conversation as the year begins to shape.
Happy New Year, Otto. As always, it's a pleasure to be here.
Let me begin by asking you, of course, you're conversant with the developments, geopolitical developments shaping the international space from Venezuela down to even Iran, and of course the issues around Ukraine and Russia still lingering. But let's look at how this is shaping international crude oil price regime, considering Nigeria's projections. We've seen several economic outlook projections for crude oil price ranging from $60 per barrel to $66 per barrel. But what are the implications for Nigeria looking at this geopolitics?
Okay, I think first and foremost, traditionally, crude prices has been driven largely by what you could call classical supply-demand fundamentals, pretty much. But now we begin to see increasingly that geopolitical risks and geopolitical tensions are then beginning to influence what we're seeing in terms of crude oil pricing, right? And at the moment, we're having what some of us call geopolitical fragmentation, right? So you have the issues going on, for example, the Russia-Ukraine conflict, the instability in the Middle East, and a couple of filters coming out from the Red Sea, all that entire belt. So what that's done is it's exerting some sort of pressures, which is then you're beginning to see structurally elevated, freight, insurance, security cost, and all that is having having an impact on pricing, clear impact. You also have OPEC plus group versus the non-OPEC group. Yes, that's supply resilience. So the non-OPEC group is trying to work on supply resilience. The OPEC plus is trying to introduce that discipline. So that sort of tension with producers like US and the shale also bring into bear their own, competitive dynamics. Then thirdly, I think the energy transition paradox. And why do I call it a paradox? The energy transition is trying to introduce, and not just trying to, has already introduced what you can call capital discipline in upstream investments globally. So the implications of that is there's tightened future supply, because there's now tighter strictures around capital flow. But at the same time, you also then have increasing demand from economies like the Asian economies, and they continue to demand more and more oil and gas products. So it's within this competitive tension that the prices continue to evolve. For Nigeria, for us, I think we must come to terms with the fact that we have to continue to live with price volatility. There's nothing we can do about it. All we can do is try to find a way to become more efficient, operationally efficient, fiscally efficient in the way we produce, just so that we can then continue to optimize any price uplifts that come out geopolitically. That's the best we can do at the moment, yes.
Yeah, very important. The issue of efficiency. And of course, that's something that we must take seriously, which brings me to, of course, the 2025 oil and gas upstream bidding process under the purview of the Nigeria Upstream Petroleum Regulatory Commission, which already has a new boss in town. But let's look at something interesting about the new principle of drill or drop. The fact that you're not going to get just the license, but you have to unlock the various marginal leases that you get. How is that going to shape the upstream part of the oil and gas industry, which will have impact on our production capacity? We did about 1.6 to 1.7 million barrels per day, and we need to really step up for 2026.
Well, for me personally, I love the drill or drop policy. It's long overdue, if you ask me, because historically we've suffered from what you could call, I would call it speculative acreage holding. What does that mean? People get these blocks and they warehouse them, and many people don't develop these assets. And the implications is you then have constrained production growth and lack of value creation in the sector. That can continue. So what the drill or drop policy was intended to achieve is to systematically decouple that sort of structure, not just the structure, the mindset. So if you're bidding for an asset, bid because you think you can work the asset. If you can't work the asset, then let the asset go to those who are able to work the asset. So, and I think importantly, because we are trying to attract investors, it sends a very clear signal to investors that we are prioritizing capability over capital. So it's not just the fact that you have the asset. It's not just the fact that you have capital, but you have the capability to work the asset, right? And then also execution over mere speculation. What does that mean? You have the asset, you have the capital, but you can't execute. So those are, I think, the guardrails that drive the drill or drop policy. No, but I think the real test is really about enforcement. And I think I like what the commission is doing, but just continue to enforce it in a way that is commercially, pragmatic, but at the same time in a way that doesn't stifle the sector. But I don't think it will. I think it's a good, clear signal. As long as the timelines given for people to work the assets, produce, get to first oil is realistic, taking into consideration, the dynamics of production in Nigeria, then it's a fine. It's something that we need to do, because if we continue to do it, it will help us to then unlock several stranded assets that we have all over the whole place. It will help us accelerate to first oil and also deepen indigenous participation in the sector. So in my view, it's a fantastic policy if implemented properly.
Yes, and we'll continue to track that because we need to deepen our domestic production capacity.
Correct.
Let's look at what we've been discussing over time, the need to unlock value from our national oil and gas assets. This year is a very pivotal one for that. We've seen what the Nigeria National Petroleum Company Limited is doing. I've discussed with you, you've talked about the steps for them to go to the markets. So do you see that taking real shape from this year? And what other assets can we unlock value from? I know you said we talk a lot about the petroleum side, but of course, gas gives us a lot of opportunity.
Yes, and I'm sure we'll speak about gas in a moment. But
yes,
if you remember, when I mentioned, I spoke about the primacy of execution. So
yes.
I think for us to get the most value, given what's happening at the moment, we will get it from optimizing what we have. It's not really about new assets, new portfolio. It's really about optimization. And optimization, we are actually already seeing it happening. So over the last couple of years, we've seen all the assets, divestments and rationalization, and that's seen value, particularly for the onshore assets and a couple of the shallow water assets flow from the IOCs to the indigenous operators. What now remains is that operational and fiscal discipline for them to be able to work and to continue to work the assets. Another element that is critical for us to see the value that we need is what I call the infrastructure value recovery. What does that mean? We need to invest in infrastructure. We can't escape it. The dynamics of the upstream sector, even you spoke about gas, for one of the key challenges we've had in being able to quickly ramp up production in gas, either from the upstream, midstream, or downstream, is really about the infrastructure. We do not have sufficient infrastructure. Good thing government is investing in, what I call main infrastructure routes, but at the same time, we need to attract more infrastructure development. Then I also think contractual and fiscal optimization is something that is important. And what I mean is how are the participants who are working these assets, how are they, striving to, commercialize and become more efficient and be able to tap into the benefits of the PIA. Yes, we know there are still a couple of concerns around the physicals, how to make it better and a bit more dynamic for participants. But I think given these three pillars, we are on the path to asset optimization, but it's a journey. Not necessarily just a destination. We're already on the path, but we just need to continue ensuring that we keep working the path. And importantly, the regulators need to continue working hand in glove with the industry, because the industry will always signal what the market is saying. So for me, those are important pillars.
Important pillars, but time is of essence, and I hope the Ministry of Petroleum, of course, Ministry of Gas, and the NNPC and key stakeholders will really, really ramp up, because it's big time for Nigeria to unlock value from its assets. Let's learn from what Saudi Arabia, Brazil, and even Norway are doing and getting value.
Correct.
Yeah. So let's get to the gas conversation now. Are we making progress in gas commercialization? What further practical steps need to be taken as we look at those various huge gas reserves we have?
As you know, I'm an apostle or a very ardent advocate of the gas story. So
I
my answer
know, yeah.
is that my answer
Yeah.
is and would always be an emphatic yes. We're making progress. Are we
Mm,
making progress at the pace, at the rate at which we should be, given where we are? No, we are not quite there, but we are making progress. And if you see, but at the policy level, and you've seen consistency in policy in terms of
mm,
what government is saying. Government, you can see that commitment to drive the gas sector. And you can see it's not just about mere policy rollouts. You can then begin to see pockets of structures, incentives, frameworks, collaborations, engagements with key persons, both internally and externally, to actually attract those investments. And then more importantly, there's a renewed focus on the midstream and the downstream gas sector. And that's absolutely fantastic. But gas is long-term investment. Gas is long-term play. And for you to actually then say that you're making good progress, or for you to see there are certain pillars that you need to put in place. We always talk about cost-reflective tariffs, and we understand what the challenge is. Sometimes it's a function of lack of capacity to pay, but at the
mm.
same time, if you want to incentivize investments, particularly on the key infrastructure that I highlighted as being necessary to fast-track growth, you have to work out how to deal with the cost-reflective tariffs. It's something that has to be done. I recognize the legal framework, the PIA recognizes that we will eventually
Yeah.
transit to cost-reflective tariffs. We are not there yet because the
Mm,
market needs to achieve a certain level of equilibrium, which is largely will be driven by the capacity of the consumers to be able to pay for the gas. But it's something that's important. The
yeah.
second point I mentioned, which I spoke about earlier, is the infrastructure. We can't run away from the infrastructure. We must invest in infrastructure. And that conversation has already started. You're beginning to see pockets of LNG projects, FLNG, MOMOs, CNG projects. Virtual pipeline is becoming the next big thing. And apart from infrastructure itself, you're then beginning to see derivative products being traded on the back of it. One important point I should mention, for example, I'm not sure if you're aware of the gas trade, what's happening now in gas
The
in
first
gas
ever
trade.
gas trading platform. Yes, you carried the
Exactly.
story.
The first
You
ever gas
published that.
trading platform that's been
Yes,
set up. That's a
yes.
fantastic tool because
Very
what we
massive
would
one.
do is open up the market, open
Mm,
up the opportunities, introduce dynamism and flexibility in trading. And at the
yeah.
back of that, apart from just trading on the core commodities, there's now potential to trade on other commodities. There could be futures,
Yes.
derivatives on the back of that. So people, participants can begin to look towards Nigerian's gas sector and not just as a place where I want to invest in a pipeline, but in a
Mm,
place where we are now beginning to see a growing, dynamic, flexible market, properly regulated, but then can then attract investments in various value adds. So I think we're growing. Then lastly, again, I mentioned payment. Payment is a key issue and the credit risk issues. For example, gas suppliers who are exposed to the power sector or industrial sector, those off-takers have struggled historically to meet their payment commitments. So that lingering issue needs to be dealt with decisively. So I think
mm.
if we work on these things, as I mentioned, cost-reflective tariffs, working on the payment capacity and the infrastructure, being a bit more dynamic and a bit more forceful in driving the conversation around infrastructure development, we will, in the next couple of years, begin to see even more progress. But I think we're on the right path. All we just need to do is continue to be committed and drive the story.
No, I like the part of trading gas, unlocking value from the derivatives, because the commodities markets are beginning to position for that. And that is going to be very important, a game changer where Nigerians can also invest and get value from it. But
Absolutely.
for the cost effective part, Mr. Chukwuemeka, you know that we, like you said, we need that stability so that
Yeah.
as we want to bring millions of people out of poverty, we're not taking more into poverty, paying more for gas to power that electricity. But let's find that balance. And you are the lawyers who help that framework effectively. But it's very promising what we see from gas, and that's
Absolutely.
very critical.
Absolutely.
Now, I guess the gradual shift from multilateralism to bilateralism, you've seen what's happening in Davos just last week, and of course other leaders there, and more recently concerns around neocolonialism. What are your perspectives on the outlook for Nigeria's oil and gas sector in 2026 when you look at domestic players like the Dangotes and the changes you've seen in Seplat and some other developments? What should we be looking out for in the industry?
I think what we're seeing now is only natural. It's a reflection of what I call competitive tensions, but it then introduces a level of complexity that particularly African producing countries need to be aware of. What you're hearing now, just to put it in a bit more plainly, is give me your resources, give me what you have. I'll give you funding, financing, I'll give you technology, and I'll give you security. It looks like an attractive trade-off, but I think it's important to be aware of the risks that come with those sort of arrangements. And we are beginning to hear echoes already of neo-colonialism. Not everyone agrees, but in certain quarters, you're beginning to hear the echoes of neo-colonialism. So African producing economies, not just Nigeria, you must be strategic, right? So you do not sacrifice what we call long-term value for short-term liquidity, because that's really the apple that is being dangled on the face of African economies. Behold, long-term, short-term liquidity for you, so you can get things done, you can operationalize your budget, you can get infrastructure, and it looks quite attractive. But if you're not careful, what you end up doing is you're actually sacrificing long-term value. So that's really that delicate balance that we need to pay attention that we're not doing that. So, and for us to achieve that, we must leverage our reserves. We must leverage our reserves. We must be able to negotiate from a position of strength. You don't always have to throw in everything into the basket. Negotiate from a position of strength. Adopt a phased approach. You don't have to get all you want at the go because you have an attractive deal. Funding is coming, capital is coming. Oh, it's cheap, just trade off. No, that's what we need to do. So for us, I think our outlook needs to be one that is long-term play. While we continue to pay attention to the short-term play, we need to also pay attention to the long-term play. And we need to adopt a policy of non-alignment. You begin to see globally various powers are aligning, and then you can see that some of those alignments, which appear to be merely political or security, but there's an undertone to it. It's really also about economic fragmentation, right? And there's the temptation to align yourself with a group that immediately appears appealing. Oh, they can answer us. We can get what we want from them in the short term. But again, as I mentioned, without really prescribing any specific points, we need to pay attention to not sacrificing long-term value on the altar of short-term liquidity.
And I believe that as OPEC members, we also have that way of negotiating too, in terms of deepening our production. But very incisive conversation, the need for enforcement from the regulators, whether it's NUPRC, NMDPRA, the need to ensure that we unlock value from gas with enabling framework and investment in infrastructure, and of course, deepening our production capacity with clarity in policy and alignment with our regulatory steps. But like you said, we just have to ensure that we continue the momentum, continuity in policy clarity that attracts investments. And what I've seen with the Shell commitment already, with the Southwest developing that Bonga field and other things to come, should show the signal that people can invest long-term in Nigeria. So we'll continue to track the policy clarity and the commitment of the government to ensure that Nigeria remains an investment destination and globally competitive for oil and gas. And we'll continue to use people like you to see how we can improve the framework, the PIA, make it more, of course, investment friendly and inclusive for all. Thank you for this conversation.
Thank you very much.
Osuji, partner oil and gas, Olayiwon legal firm, and we'll continue to discuss and see how the oil and gas sector continues to drive and power the economy. Thank you once again for the time.
Thank you very much, Otto. It's a pleasure as always.
Yes.
Enjoy the rest of your day.
Yes. Have a great day. Yeah.
Thank you very much. Bye-bye.
Thank you. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage. To become your way again, enrich yourself with the knowledge of socioeconomic developments around you. It is a wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.